Hello, everybody, and welcome to my monthly Vietnam update. In May 2025, the Vietnamese stock market continued its recovery from the tariff shock on the 2nd of April 2025, with the VN index rising plus 8.6% in US dollar terms. This rebound was largely fueled by the strong performance of the Vingroup family of stocks, VIC, VHM, VRE, and VPL, which together represent approximately 16% of total market capitalization and contributed about 5% to the index's monthly gain. However, despite their recent surge, including VIC's notably rally, many of these stocks appear significantly overvalued, particularly VPL, which trades at the PE exceeding 1,000 times. Given the AFC Vietnam Fund's value-based investment approach, we exclude these stocks from our portfolio. The AFC Vietnam Fund also recovered this month, with its NAV increasing by 5% according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you.
Okay, let's unpack this. We're doing a deep dive today into, well, a really interesting stack of sources covering what was going on in Vietnam back in May 2025.
Yeah, it's quite a mix. We've got market analysis, trade reports, some big investment news, and even major policy shifts.
Exactly. And our goal here really is to take all these different pieces and see, what are the key insights? What are the connections? What does it all mean for Vietnam's economy and markets right now?
Because when you look closely, there are some definite puzzles, like the stock market doing things that don't quite seem to line up with what businesses are actually reporting.
Right. And these huge policy announcements that could really change the game long term, plus some very high profile investments breaking ground.
Definitely feels like a lot bubbling under the surface. These sources should help us connect the dots.
Okay, let's dig in then.
All right. So maybe starting with that market puzzle, one of the really surprising things in these sources is how market sentiment sometimes just seems to disconnect from, well, the fundamentals.
Yeah, that really jumped out. We saw it with the AFC Vietnam Fund's performance. They actually underperformed the main VN index recently.
Which, on the surface, you might think, okay, maybe the companies they hold are struggling. But the analysis here says, nope, that's not it at all.
It's fascinating. The reports are pretty clear that this dip was mostly driven by market sentiment, not the actual operational strength of the businesses they're invested in.
Right. And they give specific examples, like export companies, the Enlong Group, they do stationery. Right?
Yeah, TLG. And Dong Hai, JSC, DHC, the packaging company, both apparently saw pretty aggressive selling.
And the driver for that sell-off, according to this analysis, it seems to be local retail investors getting spooked by those headlines about potential U.S. tariffs.
But here's the kicker, the counter-argument the sources make. These companies, they actually have very little direct exposure to the U.S. Thien Long, TLG, only gets about 7% of its revenue from the U.S. market.
Okay, only 7%. And Dong Hai, it's a bit more indirect, right?
Yeah, a little more nuanced. They supply packaging, mostly to seafood companies, and those seafood companies export maybe 30% of their stuff to the U.S.
Oh, okay. So tracing it back, that means only, 6 or 7% of Dong Hai's total revenue is indirectly tied to that U.S. market piece?
Exactly. So minimal actual impact predicted by this analysis. And yet, despite that, and despite, strong results, Dong Hai had a reported 36% jump in net profit year on year for Q1 2025.
A 36% jump.
Yeah. Their share prices were getting hammered.
Which led to some pretty interesting valuation comments in the reports. Thien Long was trading at a PE of, was it?
9.7 times, PE being price to earnings, sort of a basic valuation check. And price to book was 1.9 with a 6% dividend yield, apparently.
And Dong Hai was even lower, PE of just 7.9 times. The sources flat out call these attractive or even highly attractive valuations.
Basically saying that they're significantly undervalued just because of this short-term tariff fear, this sentiment.
So while those stocks were down, what was pushing the overall VN index up?
Well, that's the other side of the coin. The index's gains were really heavily driven by just a few big names, the Vingroup stocks, VAC, VHM, VRE, VPL. They have a huge weighting.
Got it. And the fund managers here, they weren't holding those.
Nope. The reports state they deliberately avoided Vingroup, citing what they called stretched valuations.
Stretched is putting it mildly sometimes. Didn't they mention VPL trading at like over 1,000 times earnings?
Yeah, that was the specific example given, over 1,000 times earnings, which is, huge.
Wow. So this really throws that classic investment tension into sharp relief, doesn't it? Balancing long-term business value against these short-term market swings driven by sentiment or index giants.
Absolutely. And the sources clearly see this gap between the share price and the perceived underlying value as a major dynamic right now, at least for certain stocks.
And based on that view that it's sentiment, not fundamentals, the reports sound pretty confident. They expect a meaningful recovery as investors eventually refocus on the actual business performance.
Okay, so that covers the investor perception side, especially around those tariffs. But let's maybe zoom in on the tariffs themselves. What do the sources say about the actual potential impact?
Right. So the initial proposal, the scary number, was 46%. That got delayed by 90 days back in May.
But the expectation now, according to these reports, is for a much lower final rate, probably landing somewhere between 15% and maybe 25%.
Okay, significantly lower. And even at that rate, the analysis we're looking at suggests the real-world impact on a lot of Vietnamese exporters might be pretty minimal.
Why is that?
Because they're so integrated into these complex global supply chains. It's not a simple A to B transaction.
Ah, right. They use that Nike Air Force One example, which I thought was really helpful.
Yeah, that makes it concrete. So the shoe sells for what, like $115 in the U.S.?
Roughly, yeah. But the reports estimate the actual production cost back in Vietnam is only around $18, just the manufacturing part.
Okay, $18. So even if you slap, say, a 25% tariff on that specific cost,
you're adding just $4.50.
right,
which maybe pushes the U.S. retail price up to about $119.50.
which in the grand scheme of $115 is barely a 4% increase, like 3.9%.
Exactly. And the conclusion in the sources is that kind of small bump can probably get absorbed somewhere in that chain. Maybe Nike eats it, maybe the retailer, maybe the consumer barely notices. It doesn't necessarily derail the whole thing.
And that seems to fit with what some industry folks are saying on the ground, too. The reports mention the CEO of Tyne Nguyen Garment, TNG.
A big textile exporter.
Yeah. He was quoted sounding really confident about hitting record revenue and profit in 2025, sort of shrugging off the tariff concerns.
So putting these pieces together, the sources paint a picture of, well, resilience maybe, adaptability in Vietnam's export sector.
I think so. It suggests that just looking at the headline tariff number doesn't tell the whole story. You have to see where it hits in the supply chain and what the final impact on the consumer actually is. Gives a different perspective.
Okay, good point. Let's shift gears a bit, away from market sentiment and trade toward something very physical. Big foreign investment showing up, especially in real estate, and some very recognizable names involved here.
Indeed. The sources spent some time detailing the Trump Organization's activities in Vietnam during May 2025. Quite notable.
First up, there was a big groundbreaking ceremony on May 21st for a huge luxury project in Hưng Yên province.
Yeah, this one's a partnership with Kin Back City Development, KBC. The reports describe it as massive, a $1.5 billion project.
$1.5 billion. And it spans nearly 1,000 hectares along the Red River. Plans include, what, 3 golf courses?
3 18-hole courses, yeah.
Yeah.
Plus a 5-star hotel, luxury villas, all the high-end amenities you expect.
And the groundbreaking itself sounded like a major event. Eric Trump was there alongside Prime Minister Pham Minh Chinh.
Right, having the PM attend definitely underscores the significance. And they've got an ambitious timeline, too, aiming to open the first golf courses by mid-2027.
Which, the reports note, conveniently coincides with Vietnam hosting the APEC Economic Leaders Meeting.
Smart timing.
Oh!
And full completion targeted for 2029.
And that wasn't all from the Trump Organization in May, according to these sources.
No, just before that, around May 19th to 22nd, Eric Trump apparently led another delegation, this time down to Ho Chi Minh City.
And they were looking at
exploring the potential development of a Trump Tower there, specifically in the Thu Thiem new urban area.
Thu Thiem. Big development zone. The reports say they met with city officials.
Yeah, including Vice Chairman Van Home. It's still early stages, apparently, just discussing the concept for the skyscraper.
This one also involves KBC, right, and another partner.
Yes, KBC again, and also Saigon Invest Group, SGI. The plan is for maybe a 60-story tower. costing around another $1 billion.
Another billion.
Yeah.
Wow. And the timeline?
Well, the source mentioned construction could potentially start as early as next year, but obviously that depends on getting local approvals.
So two massive projects totaling maybe $2.5 billion in potential investment from just this one group. The reports explicitly mention the goals are both economic growth for Vietnam and deepening U.S.-Vietnam business ties.
Absolutely. And what the scale and, the luxury focus of these projects really signals, according to the sources, is a strong vote of confidence in Vietnam's high-end property market.
And its ability to attract and actually handle these kinds of very large, complex foreign investments. These are substantial commitments.
Definitely targeting that top tier of the market.
Okay, so beyond these specific high-profile investments, the sources also dig into some really fundamental changes happening behind the scenes. Foundational stuff for future growth, big policy shifts, and upgrades to market infrastructure.
Yeah, this part is potentially transformative. On May 17, 2025, the Politburo, Vietnam's top decision-making body, passed something called Resolution 68 NQTW.
And the way the sources describe this, it sounds huge. One calls it Vietnam's most significant economic shift since 1975. That's a massive claim.
It really is. And the reason for that bold statement, based on the analysis, is the core change it represents. For the very first time, it officially designates the private sector as the main engine of Vietnam's economic growth.
Moving away from the historical dominance of the state-owned enterprises, the SOEs.
Exactly. Shifting the primary focus from those large, sometimes inefficient, state-run companies that traditionally drove a lot of the economy towards private businesses.
That feels like a really fundamental shift in economic philosophy. And the resolution backs this up with concrete reforms, right?
Oh, yeah. Whole slate of them detailed in the reports. Things like tax breaks aimed directly at startups, making it easier for private companies to access land and credit historically big hurdles.
Streamlining procedures, too, like business licensing, bankruptcy.
Yeah, simplifying all that red tape. Plus, really generous incentives to encourage innovation and digital transformation.
I saw they mentioned specific R&D incentives.
Right. Companies can apparently allocate up to 20% of their taxable income for R&D, and then they get a 200% tax deduction on that amount. That's a pretty big nudge to invest in innovation.
Wow, yeah. And prioritizing smaller businesses, too.
Prioritizing SMEs and startups for things like government contracts and access to industrial land.
And the resolution sets some pretty ambitious targets for 2030 as well, doesn't it?
Very ambitious. The sources list things like converting over 1 million business households, think small, informal, family businesses, into formally registered enterprises.
Formalizing the economy.
Exactly. Boosting GDP growth to a really high 7-8% per year. Attracting $3.5 to $4 billion in foreign investment, specifically for the private sector.
And developing large private champions.
Yeah, aiming to foster 20 large, globally competitive private corporations, explicitly citing models like Samsung or Hyundai.
The overall take on Resolution 68 in these sources seems incredibly positive. They use phrases like critical for escaping the middle income trap.
Which is that common challenge where developing economies stall out before reaching high income status.
Right. They call it a generational turning point, a bold vote of confidence in Vietnamese entrepreneurs, and a major catalyst for long-term growth.
So why is this shift away from SOE dominance seen as so pivotal based on this analysis?
Well, the sources suggest that historically, while SOEs were important, they often soaked up a lot of capital and resources without always being the most efficient or innovative players.
Okay.
Officially putting the private sector in the driver's seat is seen as unlocking that entrepreneurial dynamism. And the specific policies, easier credit, less red tape, R&D support, they directly tackle the things that have historically held private businesses back.
Yeah.
It's about creating the right environment for them to really take off.
Makes sense. So you've got this major policy shift setting the direction. And then also in May, there's a key upgrade on the technical side for the markets.
Exactly. The launch of the new KRX trading system on May 5th. This was a long-awaited upgrade for Vietnam's stock exchanges.
And why is that so important?
Well, the reports say it fixes those old problems with system overloads during busy trading days. It can now handle millions of orders daily across the exchanges, Housees and HCMC, HNX in Hanoi, and the depository VSDC. Much more capacity.
Okay. Stability and capacity. What else does it enable?
Crucially, it brings in features that are standard in most developed and emerging markets. Things the sources list like T+0 trading.
Meaning you can buy and sell the same stock on the same day.
Right. Short selling is also enabled, allowing investors to bet on prices going down, which adds liquidity, and faster settlement, T plus 1, so trades settled the next day instead of T plus 2.
Plus a central counterparty clearing system, right? That adds safety.
Yes, reduces counterparty risk. All these technical upgrades together are expected to really boost market liquidity and transparency.
And make it more attractive for foreign investors.
That's the key point the sources emphasize. It makes the market operate in a way that big international institutions are familiar and comfortable with, which in turn is expected to attract significant foreign inflows.
And this KRX launch is seen as a step towards that potential emerging market upgrade everyone talks about.
Absolutely. The sources explicitly call it a significant step towards getting upgraded by index providers like FTSE Russell and MSCI. They even float October 2025 as a potential target date for an upgrade decision.
Interesting. So if you connect the dots, Resolution 68 sets the big picture strategy, private sector leads growth. And the KRX system provides the modern, efficient plumbing for the capital markets to actually channel investment towards that growth.
Precisely. They work together, the sources suggest, to build a much stronger foundation, making it easier to attract both domestic and, crucially, foreign capital needed to fuel that private sector engine and get Vietnam onto the radar of bigger global investors.
Okay, so quite a month, May 2025.
Definitely. So stepping back, we've looked through this stack of sources and seen several key themes emerge from May 2025.
Yeah, you got that interesting tension between market sentiment and business fundamentals.
The slightly more nuanced reality of those tariff impacts when you look deeper.
The sheer scale of some of these new foreign investment commitments signaling confidence.
And maybe most importantly, these huge foundational shifts in both economic policy with Resolution 68 and market technology with the KRX system.
And taken together, the source material really does seem to paint a picture of, well, building momentum for the long term, despite any short-term noise.
Yeah. We've pulled together some seemingly separate threads here. Fund reports, tariff news, investment deals, policy docs, tech upgrades. Hopefully seeing how they interconnect gives you, our listeners, a clearer sense of the dynamics at play and the momentum building in Vietnam back in May 2025.
And it leaves us with a pretty compelling question to chew on, I think.
Okay.
With the private sector now officially tasked as the main growth engine, supported by these major market upgrades, and with continued strong foreign interest. Just how fundamentally different might the landscape of Vietnam's major companies and industries look, say, 10 years down the road?